Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Nathalie Capati, CEO of Jasmine Energy, and Marc Vanlerberghe, Chief Marketing Officer of the Algorand Foundation. We're here to discuss the diverse applications of tokenization in climate tech. It is great to have the both of you with us. Welcome to Trade Talks, and of course, two newer technologies. So before we get into the conversation, Nathalie, explain to us what Jasmine Energy does, where you fit within the climate tech ecosystem.
Yeah, pleasure to be here. Jasmine is a technology company first built for the solar industry. We use tokenization and AI to trade and track renewable energy credits.
And Marc, tell us about Algorand Foundation. Doing a lot of work there for sure.
So yeah, Algorand is a layer 1 blockchain, has been around for 5 years. We've been carbon negative since 2021. And as a result of that, we see a lot of climate tech applications coming to Algorand and developing on top of Algorand. And so blockchain is becoming a pretty mature technology in climate tech. So.
And I want to learn more about how the two are integrated and how you're leveraging it. But Nathalie, what are some of the key challenges within the climate tech space? What are you looking to solve?
Yeah, so the renewable energy credit typically operates over the counter. There's a lot of fragmented systems, registries, marketplaces, tracking and trading from carbon auditing. So what we do is actually bring all of those players onto one app that allows them to track renewable energy credits, origination, and retirement all in one place that is represented also in the Web 2 world as well. So we can do anything on Web 3 that you want to do in Web 2 through our app.
Yeah, well, it's interesting, Marc, because we know blockchain technology offers transparency and better governance than it did, on, let's call it Web 2 applications. And when you think about clean energy, energy is heavily regulated. I'm sure, blockchain is also being used to promote data governance, transparency, accountability, tracking. How are climate tech companies using it?
Well, I think one of the interesting things about climate tech or the challenges of global warming is that there's no silver bullet, right? Mm-hmm. So there's every kind of company, every sector, every country has to come up with its own solutions to kind of reduce the carbon footprint. And so as a result of that, you see a lot of different applications being developed on top of blockchain. And the reason why they're developed on blockchain is because blockchain has a number of characteristics that are unique, such as the immutability of data, the transparency of the data, and many of these climate issues have to do with multiple companies that have to coordinate and cooperate and exchange data. And how do you make sure that that data exchange is trusted and transparent? And that's where blockchains are really very powerful.
How does it improve operational efficiency?
So a lot of what he was mentioning was that there's just fragmented systems. So if we can reduce the extraneous admin costs of having to manage multiple systems, the token allows us to actually be able to reduce those costs so that we can put money back into the hands of developers who are making solar energy or clean energy or renewable energy. Right now they're paying for the admin fees from origination to trading, and we're able to reduce those fees down.
How is climate tech being used from that perspective when you talk about trading? How is the clean energy industry using this?
Right now, the tokenization is the technology. So if we want to be able to scale clean energy, we need a technology that's able to scale as fast with it. So that means that capital needs to move as liquid as oil. If we want to compete against oil, we need to be as liquid as oil. That means being able to get in and out of positions, being able to get access to clean energy fast through capital efficiency.
So just like TradFi, you need liquidity, you need market accessibility in order to scale this.
Exactly.
You know what's interesting, Marc? We were talking about this off camera, but climate tech, there is no one-size-fits-all solution. It's not like someone has either the axe within the tech part of this. Tell us about the diverse applications, the different types of climate tech solutions that are out there.
Yeah, I would look at them in like two broad categories. One is everything has to do with like carbon reductions, and so carbon credits, of course, is a very important component of that. Another one is like carbon insets, which is something that is very interesting. Like a lot of, in typical carbon offsets, right, a company will basically buy acres of lands to basically offset their carbon footprint, but at the end of the day, they're not really reducing their own carbon emissions, they're just offsetting them. And so there's this new tendency of like tokenizing carbon insets, which means that a company can invest in actually reducing the carbon footprint of their own supply chain. Yeah. And so they can basically help fund, for instance, a shipper to switch to biofuels and help fund that transition so that the actual supply chain and the actual carbon footprint of the company and their supply chain actually goes down. And so these things also get tokenized on chain and then traded. And I think that's a very interesting evolution.
I think one of the benefits of that is it removes this notion of greenwashing or pay for play, because this is it's traceable, it's accountable. You're not buying land so that you can continue to do your operations that might not be so environmentally friendly. So it sounds as if it removes some of that greenwashing rhetoric that you hear.
Exactly. And so the other thing is that besides the carbon thing, there's the other big area where we see a lot of activity is in like supply chain tracing. And so if you look at, for instance, the European Union right now has specific regulations around deforestation and making sure that commodity products are not coming from farms that are in areas that are susceptible to deforestation. And so now companies that want to import, let's say, oil or cocoa beans or rubber into the European Union have to be able to prove that those commodities are not coming from those endangered farms. And so you have to now, as a company, be able to trace all your commodity materials from the exact farms all the way to your end products. Right. And so again, an area where blockchain can really be super powerful, because you have to coordinate data amongst a huge number of companies and be able to trace it all the way from the origin to the end. And so a company in Barcelona, Finboot, is actually focusing on specifically on that and basically running that kind of traceability solution on Algorand.
Yeah, you can't escape reporting, and you just have to comply. Let's take a step back a moment, Nathalie, for a moment, and learn more about the ecosystem. Yeah. What's your role relative to Marc's? How do you leverage the Algorand ecosystem?
Algorand is a blockchain, so Jasmine is an app that would be built on a blockchain like Algorand. It's beautiful that they are carbon neutral or carbon negative, which would be really difficult to achieve because a lot of the blockchains are so energy dependent and the grid is not clean. There's still a very large mix of dirty energy and clean energy on the grid. So to see a blockchain that's carbon negative is actually a really big and impressive feat. So we strive to build on blockchains. We're built on Base to be able to use different tools that are built on these blockchains so that we can start piecing together on and off rails, start getting, for example, we do an end-to-end solution. So we operate the only two-way bridge that allows us to connect to renewable energy credit registries and then also bring those assets, verified assets, on-chain through a token representation. So that's how we're building the ecosystem from an end-to-end solution.
Right, and that's what helps to provide the liquidity.
Correct.
As well. If you were able to achieve no carbon footprint, right, why can't other blockchains do it?
Well, it goes back to like the original conception of Algorand, and Algorand has been set up with a consensus model that uses very little computing power. And so you can run a node on the Algorand blockchain with a Raspberry Pi, like a really minimal computing resources. And so it takes really minimal energy resources to actually run the entire network. And that's what makes it unique, and that's what makes it very easy for us to be carbon neutral and carbon negative even.
Which is so interesting. I want to learn more about the structure. So is it run almost like a corporate structure where you have CEO, COO, and so forth? Or because when you say it's a consensus model, what does that look like?
Well, the Algorand blockchain is, of course, completely decentralized.
Right.
And so the nodes are being run by thousands of different people all over the world, but they don't need to run those nodes in data centers. They can run them at home on their home computer. Right. I'm running a node myself. I'm a 10-year-old Mac Pro. And so it's very easy to run a node. It takes very, very little energy to actually run a node. The foundation is where I work for. The foundation's role is really to kind of help manage the governance of the decentralized network and also foster the innovation and help entrepreneurs get started and start their businesses on Algorand and help them from a technical perspective to be successful on the blockchain.
So there is something of an advisor role in there. What if, among the consensus model, somebody wants to achieve something and the group doesn't agree?
So there's a technical consensus making sure that the blockchain is operating properly and that blocks are being created, and that's completely decentralized. Nobody has anything to say about that. There's governance around key decisions that need to be made, and as a community, and so the foundation is basically helping orchestrate that governance and putting measures up for vote, and then the community can vote on those measures, and then they get either adopted or rejected.
Well, which is interesting because you could trace it back to if somebody was out of compliance.
Yeah.
Right?
Yeah, exactly. I think one of the things that we tackled and we learned from the early technologies of blockchain was the first tokenization of carbon offsets, where tokenization wasn't the thing that was was a misstep. It was the act of making sure that the systems, for example, making sure you had active credits that were tokenized and not retired credits that were tokenized, and being able to follow the rules of like the real world and applying them to digital assets. So making sure that we still have that consensus with the real world is also, I think, an important thing that we try to strive for.
Absolutely, and I think, you know, again, we were talking about this off camera, but even in the past 12 to 18 months, the conversations have really shifted to what signals to me that it's matured, where it's not, you know, the tech ethos, us versus them, but user experience, and that's really been key in understanding the audience that you're talking to. I mean, whether it's TradFi or DeFi, there's just two different languages, and you're trying to figure out how to integrate that. Of course, everyone's advocating for a policy framework as well. So it signals to me that it's starting to mature, and not only that, it's not leveraging this technology just for financial services.
Exactly.
Yeah.
Yeah, we're seeing that our first early adopters were actually Bitcoin miners, and these Bitcoin miners were in fact green. They were using solar power to mine Bitcoin. And what was interesting about that was that they had renewable energy credits, but because of the disconnect between Web 3 and Web 2, they didn't realize that they had these climate assets that were on the books and ledgers of you know, brokers. And so for us to connect those two worlds is really important, because we ended up being able to discover, you know, $500,000 in renewable energy credits through tokenizing them and finding them liquidity in a way that was natural to them. So they're used to wallets, they're used to fiat, they're not used to talking to OTC desks. So they're working through us as, you know, a large demand for tokenized renewable credits are these digital native products, companies, data centers.
So it's almost like if you have an electric vehicle or solar panels on your house, and you get rebated for that or credited for that, is that essentially the same thing in the digital
Exactly.
world?
Like I would say, I mean, renewable energy credits are one of the first digital native assets before even Bitcoin. There was a very early market in which these are represented through a meter, and meter data is digital. So unlike the carbon markets, where it's hard to digitize carbon offsets from a tree or from a forest, we're able to read directly from a meter, which is digital data, and we represent that in a token. So the difference is, again, we are a real world asset that is represented through a token. And if you believe in the renewable energy credit, then you invest in the token.
It seems so obvious now, Mark. You know, would you explain it? It breaks it down like that. It's obvious.
Is. And it's interesting to see that specifically in this sector, as I said before, I think blockchains are becoming a mature technology. It is understood what the benefits are of blockchains to be able to achieve progress in climate tech, but what you see also happening is that a lot of the entrepreneurship on climate tech is actually not in the US, and not, of course, not everybody, but because of the problems of regulation in the US and the reputation that blockchains have and crypto has in the US, you see that a lot of innovation is happening outside the US, and I would hope that that is going to change so that we get more innovation in the US and that we can really be the leaders in how blockchains get developed.
I mean, especially our regulatory and legislative system, it takes time to evolve, and we all recognize that, but with the economy at scale that the US offers, once you get that framework around it, and we've seen Bitcoin's reaction to that with the expectation that some sort of framework might come to be, that's when it really, you'll start to see more innovation is what I think. And I also think too, because Bitcoin was first associated with blockchain and that was not well understood, but if you were to have associated mortgages or insurance contracts or the supply chain with it, that's more of a natural fit, if you will.
Yes.
So you are seeing other types of applications.
Right, exactly. So we see, for instance, in real estate, we see like fractional real estate, where people can actually become a real estate owner, a house owner, and buy like tokens that are costing $50. And then they get on a daily basis, they get a fraction of the rent delivered to them. You also see people that are renting to buy. So they basically rent a house, and then they start buying tokens with their savings in the house that they rent. And so they get reductions and discounts on the rent, and so they can gradually become a house owner as a result of this system. And so you see applications everywhere. So applications across different verticals, which is very interesting to see.
Yeah, and like I said, I think once we get a framework in place, that's only, either it's going to onshore some of that innovation, or, or acquire it, organically grow it. I mean, you were saying this before, it's just that easy to start a startup.
No, I agree with what you said, though. In the beginning, I think a lot of the tokens out there, if you cut them up into categories, a lot of them were were meme coins or were cryptocurrencies were backed by, they had a specific problem to solve or a representation. Meme coins represent the cultural norm at the time. If you believe in that cultural movement, then you invest in the token. Similar with Bitcoin, if you want an inflationary hedge, you invest in Bitcoin. What we're seeing now is that there are real world assets coming online because people believe in the real world solution.
Yeah.
And it just needs to find more liquidity.
And I'm glad you said solution, because as a technologist, you don't want to just, create fun things to play with.
Exactly.
You want to find a problem to solve. That's, artificial intelligence, which I'm sure is a big part of this conversation too. Everyone wanted to come to market, whether it was internal or external, and enterprise still does. But what are you solving? You just don't want to add something else to the tech stack.
Yeah.
And I feel like this is how it's maturing. So in the last few minutes here, how is AI impacting what you're doing?
Oh, tremendously. I mean, a lot of the AI is very dependent, again, on grid stability, on energy, and a lot of those data centers also are making 100% renewable energy goals by 2030. So what we're seeing is that instead of a compliance market where I think folks were a little, interested in how we were going to succeed if the new administration would change compliance markets, but instead I'm pretty bullish on seeing that the compliance market might fall into the background, but voluntary markets will pick up because there's still very climate conscious consumers out there, and corporates are taking their own personal stance to be 100% renewable energy, which is making the voluntary market for renewable energy credits quite strong. And that price signal invites more investors into this.
It certainly does, and particularly the energy space, Marc, it's capital intensive, right?
Yeah.
So this is, and it's not just going to go away. So this is, another way to help evolve that.
Right, and I think the application of AI, again, combined with blockchain, I think is super, super interesting, and there's so many applications. One is, we talked about like data and the quality of data and data veracity. Like, you don't know these days if something has been, changed by AI. How do you know if something is true, right?
Yeah.
Well, you could actually store the content or a hash of the content on a blockchain, and it can provide the guarantee that something is true and something is coming from a real person. AI combined with agents combined with wallets. So you can now give an AI agent access to money so that they can actually do transactions seamlessly on a blockchain. And then there's a whole other area where AI and blockchains intersect, which is the idea of AI needs a huge amount of energy, needs a huge amount of GPUs. Like, can you, for instance, set up a system where GPUs get shared amongst different companies, so they don't have to all buy the same expensive GPUs, and you use decentralized form of AI training, which is not a very promising area for the future.
Panel conversation for another time.
Yes.
Appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.